So for 15.1, 15.1 is the first part of our end of the fiscal period work where we're making permanent financial statements. A worksheet is not a permanent financial statement. It is a financial statement that we create to get our books ready for the rest of them. Permanent financial statements are ones that the company is going to keep on hand, investors would look at to determine whether or not the business is profitable or not. So the first one we have here is our income statement. And one of the things we have on Applia here is you're going to notice that our income statement looks a little bit different than what we did in our first unit. We know it's an income statement because this last column right here says percent of net sales. And that's the only time you're going to see a column where you're actually going to have a percent sign is going to be on an income statement. When we look at the rest of our income statement, we see here on the left column, this is going to be where we put our account titles, and then we have number columns. You will notice now that we have 4 number columns. So this is not debit and credit, it's not income statement, it's not balance sheets. What we need to remember on an income statement is the far right is always your totals. So we keep moving over to get our numbers. Our income statement is harder for a merchandising business than it was for a service business. A service business, all we do is we take a look at our sales minus our expenses, and that's our profit. But if I'm going to sell you this monitor, the $100 sales for this monitor is not our total profit because we have to subtract from that our cost of goods sold. So we have to go through and look at some of those numbers in order for us to be able to fill it in. So our top section on our income statement is going to change in order for us to complete our cost of goods sold. So let's go ahead and fill in the very top 3 lines. And the top 3 lines are going to be the name of the business, and the name of the document, and the date. So we are using a worksheet for Interstate Tires. Name of the document is an income statement, and it does say that we are using the worksheet for year ended December 31st. So we're going to go ahead and plug in here for year ended December 31st of our current year. Hang on one second, sorry. The next thing that we're going to go through and do is we have to go through and plug in our number portion. And we know that everything on our worksheet that is on our income statement columns is going to go on our income statement. So they gave us our whole completed worksheet, and we know everything that deals with these numbers are going to go on there. But you're not going to just start with income summary down and plug them in. We have to go through and set up our sections for that. So we're going to start in the very top. And the first thing that we have to keep track of is going to be our revenue. So I'm going to go ahead and lead with my revenue heading. And you're going to find that revenue is going to be followed by that and a colon. And then this is a heading. There is no number that goes immediately after it. So when I go across, you will see that Applia does not give me a spot to fill in. Most students accidentally put the word revenue up here because there's kind of this big heading space where we have that percent of sales. So make sure that the word revenue actually goes in there. And now we need to go through and calculate our revenue. We calculate our revenue by starting with sales. And then when we look at our worksheet, our sales number is $548,989.25. And I got that right from my worksheet. It goes on the second from the right column because it's not a total, and I don't really have to do anything with that number. Bless you. When I look at my worksheet, though, I can see sales is right here, but I have 2 contra account to sales. I have sales discount and sales returns and allowances. Sales discount is the amount of discount that we have given to our customers, and sales returns and allowances is what customers have returned to us. So those two numbers are going to subtract from our total sales amount. So when we go through to plug it in, we are going to have to put in the words less, and then we're going to do sales discount. And sales discount is $661.69. And then you're going to have sales discount, not sales discount, sales returns and allowance, immediately below it, which is $3,512.84. Now this is where it gets a little odd. So I have these two numbers here, which are my contra account to sales. I'm going to add these two numbers up, the $611.69 and the $3,512.84. The total of those two is going to go right here immediately to the right. It's not going to go on its own line below. We're just going to put it over there to the right. So I have $4,174.53. Now, what am I going to do with that $4,174.53? What do you think I do? What does it say right here? Less. So what am I going to do with that 4,000? Subtract. So I'm going to take my total sales number, and I'm going to subtract the total of those two numbers, and guess where it's going to go? All the way over here to the right. Okay? And my total sales number would be my net sales, because net sales is my sales minus my contra accounts, and that'll be $544,814.72. I am not going to do this percent of net sales column right now. I'm going to go through and plug in all of my other numbers. So what I just did is I calculated my revenue. I had to take my total sales and subtract my contra accounts to get my net sales. I have to do the same thing for my cost of merchandise sold. So this is a heading. So cost of merchandise sold, when you type it in, you will notice it is followed by a colon. Just like revenue is followed by a colon. So therefore, it is not a number. It's just a heading describing what is going below it. This is a formula that you're going to need to remember, and you will have to plug it in on the test. The very first thing that you have to do is you have to start with your value of merchandise inventory on January 1st. Okay, merchandise inventory is the value of all of your products that you have on hand that you're going to sell. So when I look here, I said everything that goes on the income statement columns goes on my income statement. But you will find that merchandise inventory is actually up here in the very top of my worksheet. And when I look at merchandise inventory, I have two separate numbers. And this is always the thing that students get wrong. Merchandise inventory on January 1st is your trial balance amount. Merchandise inventory on December 31st is your balance sheet column. This is how much we had when we started the year. While we bought merchandise through the year, we effected the account purchases. At the end of the year, we went through and did inventory, and we just did this in the last chapter. They said our current value of merchandise inventory right now, and that's the number that goes right over here on my balance sheet. So I need to take this $198,480.33, and that is going to go in the second from the right column. And my heading for that is going to be merchandise inventory, January 1st. Now, from that, we have to add to it the items we bought, the discounts we got, purchases, returns, and allowances. So I'm going to go over here and I'm going to put in the heading of purchases. So purchases is really our merchandise that we bought throughout the fiscal year. And you're going to find that that is on your income statement column, and that's $278,452.39. So I'm going to go ahead and plug that number in on the second from the left column. Now, just like we did sales, we have purchases discount and purchases returns and allowances, which are contra accounts. So I'm going to put in here less purchases discount of $1,845.78, and then I also have purchases, returns, and allowances. Notice how we have discount and returns and allowances, and discount and returns allowances, they start with the word less. We put them right above and below each other, and when we do that, we add the two of them up, and then that number is going to go immediately to the right of it. So, again, these two are contra account to purchases. We use it to keep track of what we got for our discounts, because that means we paid in a timely manner and our goods cost less, and how much we returned. So if I add those two numbers together, I'm going to get $5,394.43. You will notice that this number is immediately below purchases. What am I going to do with this 5,000? Am I adding or subtracting? Why? I agree. Because it says less. So I'm going to take this 278 and subtract my 5,000, and that's going to go here on the second from the right column, and that is going to be called your net purchases. So that should be $273,057.96. Now, basically, this is that $273,000 is how much stuff we bought throughout the year that we're going to turn around and sell to our customers. Anytime we buy something, we expect purchases. We just had to subtract out our contra accounts. So this is how much we started with throughout the year, the $198,000. This is how much we bought throughout the year. So my next heading is going to be total cost of merchandise available for sale. And I'm going to add my $198,480 to my $273, and that should give me $471.538.29. Just adding down. You can. Now, the whole point of the section that we are creating here is to find our cost of merchandise sold. This $471 is the total value of products that our business had on hand throughout the whole fiscal year available to our customers. We need to find out the cost of what we sold, though. So what we need to do right now is we need to subtract our ending inventory, because if this is what the total amount we have, if I subtract what I have left, that's going to give me the cost of all of the merchandise that I sold to my customers. So my next heading right here under total cost is going to say less merchandise inventory, December 31st. And this is where students are like, I don't know which one goes where. Because I said this January 1st one is always going to be your trial balance. Your merchandise inventory December 31st is always going to be your balance sheet number, because there are two numbers for your merchandise inventory. So go ahead and look on your worksheet. In the column second from the right, go ahead and plug in your merchandise inventory from your balance sheet. when I looked there, I found my number. It was $188,999.25. You will notice that the heading here says less merchandise inventory, so that tells me mathematically I have to subtract. So go ahead, subtract those two numbers, and the number will go all the way over to the right. Did anyone get that number? I agree. 282,539.04. And that is called your cost of merchandise sold, which matches this heading. So I have cost of merchandise sold at the very end. That's what we calculated. So this is what we've been talking about all along when we switched to a merchandising business. If I sell this lunchbox, it costs me something to buy it. So I sold this lunchbox for $544,814.72. It's a really nice lunchbox. Except I just had to go through and calculate what it cost me. And how much did this lunchbox cost me? Ben? Yeah. So this lunchbox cost me $282,539.04. Or usually I use the monitor and I say I sell it for $100. Its cost is $50. So then I'm going to get my what is called gross profit on sales. That's my next heading. And I find that by subtracting my cost of merchandise sold from my sales. That's the hardest part about this whole statement, is understanding and knowing this. Here is my recommendation for you to know how to do this on the test. I suggest that you practice actually writing it on a piece of paper, like on a note card or something like that, saying so you know the orders of the headings, because it's not going to be given to you on the test. You're going to be expected to know that. You're going to be doing a bunch more income statements in this chapter. But that is what I have found is the easiest for students is if they write it a bunch of times and they remember the order. Some students will go through and they'll create their own pneumatic or lettering to remember the order of it. I don't have a tip on that because it's really just stuck in my accounting type brain. That's the order and I understand how it flows through. But some people will go through and take the first letter of the heading and say, okay, this is what it's going to be, and remembering and making a statement. Now, the bottom part is the easiest. Did I do a math mistake? Subtract. Yeah, the ones that are right on top of each other. Your sales, your net sales from your cost of merchandise sold. Great question. Thank you for asking. Now, you will notice right below gross profit on sales, this aptly is really nice because it shows you, hey, I don't need any numbers there. So it's going to be a heading, and that heading is going to be expenses, and that word is going to be followed by a colon to indicate I'm just classifying it. You don't really need to put anything in there. Now, for expenses, you will find that really what I have done is I have dealt with lines, purchases, returns, and allowances up to income summary on the very top part of my income statement. Now I need to deal with all of these expenses. So I will go through and list every single expense and what it says on the income statement column, not the trial balance, because we have a lot of them that are being adjusted there. So just make sure you always get your numbers here for your expenses from your income statement column. total expenses? Woo! Oh, I do. Thank you for helping me on that, right? Am I off now? The depreciation expense for equipment, that one's $5,000. What was I doing? Okay, so once you help me fix my mistakes, thank you. We have our total expenses. Now, what we're going to put in here is you'll notice that we did not put in federal income tax. So I have total expenses, and I'm going to put in here my net income before federal income tax. And all I do from there is take a look at my gross profit on sales, my $262, $275, and I subtract my $184. So again, I take my $262, $275, $68, subtract my total expenses, and that's going to give me my net income before federal income tax, which I have calculated as $77,511.14. Do I have anyone concurring? Nice. This is what you had to do on the last chapter. Basically, you went through and you subtracted to find out what your net income was before taxes, and then we calculated the taxes. Well, we already have that done on our worksheet, because right here it says my federal income tax expense is $14,603.79. So I'm going to go ahead and put in here federal income tax. Less federal income tax of $14,603.79, and that's going to give me my net income after federal income tax, which magically should equal the $62,907.35 on your worksheet. If it doesn't, somewhere, somehow you made a boo-boo, and most likely it's in the cost of goods sold section. This number from your worksheet here must equal your number on the bottom of your income statement. If it doesn't, somewhere on one of these documents there's a mistake. So we've gone through and we did number 1, prepare an income statement. Number 2 says calculate and record the income statement on the following component percentages. Now, this is one of those weird times in accounting where we're actually dividing. All of these numbers, we calculate a percent here with one decimal place by taking this number and dividing by sales, every single one of them, so that when we start at the top, we go through and we actually take net sales and divide by net sales. So what is its percentage? Always, always going to be 100. And you need to have one decimal place. Now, when I go through to take my cost of merchandise sold, I'm going to take $282, $539.04, and then I'm going to divide by $544, $814.72. So this is what my calculator gives me. I need to have one decimal place, so I need to take this decimal point, move it 2 to the right, and that'll give me 51.85, but I need to round this, so really what is it going to be? 51.9. That's what's going to go on my income statement. What does that mean? For every dollars of sales, it cost us 51.9 cents. Okay? So my gross profit on sales, I'm going to calculate exactly the same way. I'm going to go through and take my 262, 275, 68. Divide by 544, 814.72, and then you'll see that my gross profit on sales is 48.1, because when I take a look at the number to the right of that, I don't have to worry about rounding. The next one I'm going to do is my total expenses. So I'm going to put in 184, 765.54, divide by my net sales, and that will give me 33.9. And then your net income before federal income tax, you take $77,511.14, divide by your net sales, and again, everything is divided by net sales, 14.2. Yep. Subtract these two numbers, 262, 275 from 184, 764, 54. Do you have 262, 275, 68? And 184, 764, 54? Did you subtract again? Does anyone else agree with my 77, 511? That's okay. Sometimes I'm bad at math too. See? But that's really all you do is you just subtract down. Okay, so what does this 1412 mean? What does this 1412 tell us? Yes, but he said it really hard. What's the easier way to think of it? For every $1 of sales, our net income is 2 cents. For every $1 that this business brings in, 14 cents out of it is net income. Okay? So when you think about it that way, it makes more sense. Instead of looking at this big number and being like, oh, okay. Now, why do I need to know that? Because if I compare it to another business, their total sales may be huge. And it's really hard to compare numbers. But if I compare percentages, and the other business's net income before federal income tax is much smaller, who's doing a better job of managing their expenses? We are. But you can't just compare raw numbers because maybe the business is 3 times the size. So your component percentages allows you to compare across businesses to see how well they're doing. They have certain industry standards that certain types of businesses need to follow. Some businesses have much more expenses, and they make up a lot of their net income because they have a lot more sales. Don't worry about completing the on your own. Go ahead and click on Save and Continue. Take a look at 15.2. Now, 15.2 really looks at our income statement, and we have to make decisions. So when we look at our income statement, which they gave us in the directions, it says, use your income statement for Tires, Inc. Interstate Tires determines that no more than 53 cents or 53% of each sales dollar should be devoted to the cost of merchandise sold. Compare the actual component percentage for the cost of merchandise sold to the acceptable percentage. Indicate if the component percentage is acceptable or unacceptable. If it's unacceptable, what are you going to do to correct it? So what we need to do is we have to look at our cost of merchandise sold. Cost of merchandise sold, what is our percentage? 51.9. So I'm going to plug that in right here where it says actual. Now, when I read this, it says cost of merchandise sold. The industry standard says this type of business should not have a component percentage higher than 53. Does Interstate Tires fall in the acceptable range? Yes. So I'm going to put a check mark there. Or a V. Do I have to put anything if there's any recommendation? No. So we're going to do the same thing for gross profit on sales. What is our gross profit on sales? What percentage? 48.1? And it says not less than 47, so it's acceptable. Oh, we'll get it. The next portion that we have to do says, Interstate Tires currently has 110,000 shares outstanding with a market price of $13.75. we have to take our net income after federal income tax, which is $62,907.35, and we have to divide by our number of shares outstanding. And that's the number of shares that have been issued for a business, and that's 110,000. Missing a zero. So basically, we're going through and trying to figure out how much money goes to each stockholder. So if we divide the two, what is our earnings per share? Say it again? 57 cents, exactly. When you divide these two, you're going to get 57 cents. Now we take a look at what your market price is. In the directions, it says our market price is $13.75. I divide that by my earnings per share, which gives me my price-earning ratio of 24.1. Now, I will tell you, on your own, you do not have acceptable numbers. Because it says for the on your own, the total expenses is 34.8, which means that it is not acceptable. So what would we do to lower expenses? Take a look at ones that could be reduced. They have a drop-down list here, and you'd have to choose which one makes sense for that. See you later.